What's up, Heath? Welcome. All right, can somebody thumbs up? Do you see Cedar Ridge Management Q1 owners call? Sweet. Well, hey, everybody, thank you so much. Hey, Beth, thanks for that thumbs up. Thanks for joining. I really love doing these calls. I'm super passionate, as you guys know, about building wealth through real estate and doing that with people. So I think every time is a good time to invest. You just got to do it wisely. So today, what we're going to talk about, like we do every day, is quick advice from Warren Buffett on how to be a good investor. We're going to go into some finance and lending info with Drew Blakely, and I'll introduce all these people at that time. We're going to talk about sales trends with Sean McDonald. We'll talk about rental trends with me. And then we are going to talk about raising private capital with Dave from Military to Millionaire. So if you're active duty, if you've been in the military, you're going to connect with this guy and you're going to like it. And if you know people that would benefit, I'll send this out and you can shoot it to them so everybody can build wealth through real estate. So without further ado, Warren Buffett, you guys know who he is. I repeat these quotes every single quarter because I think they're so important. It's far better to buy a wonderful property at a fair price than a fair property at a really cheap price, right? A really crappy price, and then you have a headache to deal with. So Warren Buffett's favorite holding period is forever. Just let that settle with you. Quote 2, never depend on a single source of income. So what that means for us as real estate investors, have multiple properties. Risk comes from not knowing what you're doing. Quote number 3. So this can be risky if again, you don't know what you're doing, but if you underwrite things well and manage them well, you can make a lot of money. And then I added this one because it's so true. Time in the market is way more important than timing the market. And just let that resonate with you as you hear all of this bad news about what's happening with home prices and stuff on the news. So lastly, I love talking about where we are in the real estate cycle. You never really fully know. You can just make an educated guess. And I personally think in Eastern North Carolina, apartments are somewhere in like hyper supply. They're having a tough time filling up all of the things that they built in the last 3 years. And I'm really excited for this summer, but I think single family homes, I think we're kind of like at equilibrium right now. So Drew Blakely. Hey guys, I have bought 2 houses in the last 4 months, and Drew has lended on every single one. I've been extremely impressed with his professionalism, with where he is on his investing journey. And I can't speak enough about how seamless the process is with him, and how much he's looking after me to save me money so I can make a lot of money over my lifetime with real estate. So Drew, over to you, man. What's going on in the investing world?
I appreciate the introduction, Skylar. And yeah, for those of you on the call I do not yet know, my name is Drew Blakely. I work in southeastern North Carolina. Our office is based out of Wilmington. Little backstory on myself. I first got intrigued by real estate I came from a lower middle class family, and we did not know how I was going to be able to pay for my college tuition. And so my dad and I began buying and selling properties when I was a sophomore in high school in order to pay for my college. I came out of college debt-free as a result of that process, and I was forever indebted to the power of real estate and what it was able to accomplish in my family's life. And so quickly after graduating college, I got married and I moved down here to Wilmington, and I knew right away I wanted to get involved in real estate once again. I bought my first house hack shortly after getting married. I lived in the front of the house, rented out the back part of the house, and that process has helped snowball into, over the last 3 years, my wife and I have closed on an investment property each of the last 3 years. And so I have a few rental properties under my belt. With all of my love and passion in the world of real estate, I decided to go into the mortgage industry. I've been in the mortgage industry for about 5 years now. Skylar, you can go to the next slide. Now, my career started at a big box mortgage company. I have nothing but great things to say about my time there. The frustration and the reason that I now work at this really small company called Loan Steady is for two reasons. Number one is the bigger the company, the more people need a piece of the pie. So if there's all sorts of local managers, divisional managers, regional managers, that ultimately impacts the rate that the consumer or the investor gets on the street. And so I found that going to a company that only has about 25 loan officers nationwide, there's no middle management between me, the vice president, and the owner. And that does a lot in the world of interest rates, which I think is what Skylar became keen. He had a keen eye for that when we first started working together sometime last year. The second thing about the size of the company is there's less red tape when there's less people having eyes on it. And by no means am I saying, oh, we close on fraudulent loans, but there's just the level of you get answers, you have flexibility, and you have creativity. And that's what I like to offer. The other thing I take a lot of pride in is my honesty and my integrity throughout the process. I really, really, really appreciate being a consultant to each of you. And so if you were to call me and ask about a product that I knew I was not the best at, I would then go and refer the product to somebody else. I think I saw Heath hop on this call just last week. Heath reached out to me about a product that I could do. I could close on it, but I knew I was not the best at it. And I took Heath and I gave him a warm handoff to somebody who would be really great for him. So those are the two advantages of working with myself and Loan Steady. You have a small, really aggressive, really adaptable mortgage company specializing most specifically in VA loans and working with investors. And then the second thing is just my ability to consult you through the process. And then this last slide I have here just kind of talks about the trajectory of mortgage rates. I get this question all the time. Yesterday, I polled, or maybe it was on Sunday evening, I polled what the current mortgage rates were. You'll see here that a conventional loan is running in the mid to high sixes for a primary residence, right around 7% on an investment. You have your government loans, your FHA and VA are down into the low 6%. I'm also seeing, if anybody's a veteran on here, we're doing IRRRLs right now in the high 5%. So if you guys have something that you guys need to refinance, you're looking at that. And then the jumbo loans are 6.8. And how this compares to national average, or more specifically, the average over the last 15 years or so. The last 15 years or so, the average mortgage rate's been in the mid 4%. There's a huge asterisk next to that just because of the duration of time of 2020 to 2022, rates dropped to historical low. So there's a big asterisk next to that. We're falling to what would be a more average rate environment. And finishing up here, the Mortgage Bankers Association, you see kind of what their rate projections look like for the rest of the next year. And I think more than anything, if you guys take away just one thing, nobody in the mortgage space, maybe the news is telling you that mortgage rates are going to keep dropping, but the professionals in the space are thinking that where we're at right now is going to hold pretty steady for at least the next 6 to 12 months. So if you're on the sidelines waiting for rates to fall, I think you might be disappointed because more people than not are predicting stability over an actual drop in rates. And so again, that's me. If you guys want my contact information or something, I would love to reach out and connect. And again, Skylar, thanks for having me today.
Yeah, of course. And I'll include your contact info in a roll up when I send this out. But guys, Drew is a straight shooter. He's not this guy that's like, hey, give me, what do you want? And then you get another bid and he like wants to haggle. He tells you the best. And it's just a joy to work with him. Dave, we were talking earlier, his process is seamless. It's easy. And he does a good job. So thanks, Drew. Appreciate it. And if you guys didn't catch it, something Drew didn't say, but he kind of said was you should buy stuff right now because rates aren't going to be going down. And the best time to plant a tree was 40 years ago. The second best time is today. So next, most of you guys know Sean McDonald, really, really good friend of mine, and a phenomenal real estate investor and real estate agent. And he's building a very strong, or I say has built a very strong team. And he's going to share with us some national and local sales stats with homes.
Cool. Thanks, Skylar, and good to see everyone. And first, before I get into this, I want to share a big fail that I had recently with a short-term rental. So hopefully to dissuade people from the punishment of owning short-term rentals, and maybe you'll buy more long-term rentals instead and have Skylar manage them for you because he's great at it. But had a guest, we have a short-term rental here in Surf City, had a guest check out on Sunday morning, another guest check in on Sunday night, and nothing in between. So I had failed to inform our cleaners of this kind of last minute reservation. So we had a guest drive 12 hours from Michigan and show up to a dirty house, and it just is crushing. So felt so bad. We ended up giving them a 50% refund and tried to make it up to them. But yeah, I don't know why I keep like trying to make short-term rentals happen in my life, but it's painful sometimes. So my systems were broken, and yeah, just wanted to share that with you, and maybe you could learn from my failures. But what I have not had a problem with is any of my 3 long-term rental properties that Cedar Ridge Management is managing. They make it very easy for us all. So thank you for that, Skylar. But yeah, just diving into some national and local market trends. You can see we're on pace for, it's still early in the year. It was a pretty cold winter across the country, very slow January in sales, and we're on pace for about 4.2 million in national sales, which is pretty much in line with the past 2 years. You can see the chief economist of the National Association of Realtors said that it is picking up a bit. Mortgage rates have not changed much, as Drew said, but there is a lot of like housing demand that's pent up from people just kind of waiting. Everyone always has kind of an excuse to wait. There's always a convenient excuse to not buy right now, but whether it's the election or the holidays, but we are seeing a pretty big increase locally here. If you go to the next slide, Skylar. These are just some kind of overall trends that I've noticed just looking at the data and being in the market. Prices are still increasing, and I believe they will continue to. So obviously for an investor, acquisition costs are going up and returns are kind of shrinking. Unless there's a huge bump in rent prices, or unless you have a huge amount of cash to put down on just a standard long-term rental. I think there's going to be more of a rental demand once all these apartments fill up in our area. And I think there's a lot of people that unfortunately might have historically been in a place to buy their first house who might not be able to afford it now because the prices continue to climb. So I think there will be more demand for renters in the future. And we've just seen a ton of development recently, especially in Pender County and Hampstead, Rocky Point. So obviously that plays a factor too. But yeah, I'll just briefly overview the 3 kind of counties that we operate in. Onslow County. So median sales price is up 10% year over year compared to 2024, which is huge. New listings are down a little bit, but the average, home values are increasing steadily, and homes are on the market for around kind of 30 days at a time, which is dropping, especially in the first-time home buyer price range, like under 300,000 in Onslow County. We had a military family moving here looking for something under 350 in Sneads Ferry, and it took we lost out on 2 different houses they went into multiple offer situations very quickly, and it gave me a little bit of a feeling of like 2021 when there was just so much demand. Next slide, please. So Pender County, you can see the median sales price is way up this year compared to last year. I think that's definitely not sustainable, and I think that will level out and drop as we get further along in the year. But yeah, average days on market is falling just slightly. And this one stat was crazy to me, but over 5,000 new housing permits since 2020, which is crazy for Pender County, which is not, the population is not huge. 5,000 new houses is a lot. So I think it's definitely a ton of demand for people moving into Pender County. Next slide, please. And then New Hanover County prices are kind of in line with where they were last year. There has been a big uptick in inventory, 17% increase, and a little bit drop in days on market. I think the days on market is going to continue to go down as we get closer to the summer and more people, typically are selling and buying houses this time of year. Overall strategies that I think are working is if you have a primary residence that you bought several years ago, and I would recommend like considering turning that into a rental and buying a new primary residence. My family just did that. And I think that house hacking is really the other strategy where you can achieve some sort of cash flow right now. And unless you have a large amount of cash to put down, it's really hard to find a long-term rental on the market that's going to cash flow with just the standard 20% down payment. But yeah, if you have any questions, feel free to reach out. And yeah, thanks, Skylar. That's all.
Yeah, thanks, Sean. It's cool how I think lending, sales, and rental stuff kind of all happens. The same things happen to them. So I'm hearing a lot of stability happening, and like things averaging out to what more historical norms have been from rental rates, or I'm sorry, from lending rates and days on market for sales. So nationally, rents fell just a little bit. And I'm going to go pretty quickly here. Apartments, right? So for the entire United States of America are filling up at a really slow pace, and we're feeling that here in North Carolina. And build for rent has been a huge trend against or for some bigger investors and like private equity firms. Historically, though, I just want to show this. So like rents are stagnating, right? They went down just a little bit. If you look at this chart that I pull from 1940 to 2025, with everything adjusted to be in 2020 dollars, rents have just continually steadily gone up. So this is definitely a good buy and hold strategy for building wealth and passive income over time. So locally, all the apartments that have been built since the COVID era are really filling up slowly, and they're putting pressure on the 3-2-2-1 small townhome rental product that we have. But people are moving to this area still, and I'm really excited for the summer to see how that affects rents. If you guys continue to buy good stuff at a fair price, you're going to win if you hold it for the long term. If you want to get the absolute highest price, because you go on Zillow and you're like, 3-2 should rent for this because that's what I see on Zillow, you're going to be frustrated and you're going to lose, because if we're pricing at the very highest, we're going to have to drop our prices over time, and we're going to have a longer vacancy, and we're just going to be frustrated. So pricing is key. And you can still win as long as you price right. So this is just a quick graph of the United States and moving trends. So people are moving away from California, from Washington, from the Northeast, and big places that people are moving are Arizona, North Carolina, South Carolina, Tennessee, and Florida. So this is where we are, guys. Great place to be buying stuff because people are coming here in droves. Locally, and I'll send this out. And I'm actually going to start posting on my website for the areas, but rents from Q4 to Q1 haven't really changed anywhere. And I'm excited about this because it's stability and it's a little bit of predictability. And I think that we're going to stay here. We might slightly increase as we get to like PCS season and moving season. But the numbers you see on the screen you can take those to the bank, I think, for this year for those products. If you see a big range, like, $1,595 to $2,100, that's because it's a different product or like a different area, right? We're like, for a 3-bed, this is going to be Class C in Wilmington, and this is going to be like Class A. So that's the price discrepancy that you see for rents there. But what I'm really excited about, because we got a lot of military guys, is to introduce Dave to you guys. Many people have probably heard of the Military to Millionaire business that he's created. Dave started with nothing, as he'll talk about. He went from a negative net worth to a $1 million net worth very quickly, and has now over 100 properties in his rental portfolio. And he's going to talk to us about how do we solve that problem of we don't have any more money for a down payment, and we want to grow and build our rental portfolio and empire. So, Dave, thanks so much for your time today. And yeah, how can I get more money so I can buy more things?
Thanks for the intro. I guess the one thing we got to do is, do I have to say slide, or what's the cue? Should I do this?
Sure. Just say slide.
Slide. For those who don't know, yeah, that's me. He gave a quick intro. I guess this works. You should, I don't know why you should care. I bought a bunch of real estate. I've done a lot of creative financing. If you want to learn any of that stuff, great. Honestly, this presentation is just kind of more of an overview of some of the basic creative financing stuff that will lend itself probably to some questions. Creative financing is one of those interesting things where it's incredibly powerful. It's also incredibly complex, and a lot of people just kind of they hear it, they're like, wow, that's awesome, and then they never do anything with it. And we were kind of, Drew and Skylar and I were chatting before this, and the real difference between somebody who takes this and runs with it and somebody who doesn't is just whether or not you're a problem solver. And we'll kind of dig into that here as we go. But slide. Yes, this is what we're going to talk through. This might actually be your private lending, the one that you were talking about giving out. So
okay, cool.
Okay. We're going to talk through finding private lenders. All right. Slide. Sorry. The biggest thing, right? People talk about private money, finding private lenders, private money, private funding, other people's money, all the terminologies for all this stuff. And there's like this misnomer that, you just need to reach out to people and be like, hey, I know you have some private lenders. Can I borrow them? No. Private lending it's not a structured thing by nature, right? It's not like a hard money lender where you go to somebody and you're like, hey, can I get some money from some of your, this is putting in the legwork to find investors, to find private lenders, to find, it is a relationship.
Yeah, Dave, could I add, because a little conversational, if you guys since you have rental properties, put together like a storyboard so you're ready to pounce on these opportunities when they come.
Yeah.
Like you have street cred right now. If you're ready to talk to these people that Dave's about to say, like, hey, this is how to do it, the opportunity will be there, when you're ready.
Yeah. And I mean, the biggest thing for this is essentially, you kind of hit the nail on the head there. It is ensuring people in your circle know what you're doing. A lot of people like to start buying houses in private, or they think it's not worth sharing about their deal or two because it's just the one, or they're a little too humble about it, meaning they don't share anything because they're just kind of private, whatever. And all that's great until you go to raise money and people are like, oh, I didn't even know you were doing that. Right? Like everybody in your circle, it's like I always joke about real estate agents, right? Like they're, when I say the worst, I mean it jokingly in this case. But like, if you're a good real estate agent, every single person knows that you're a real estate agent. Nobody don't know. They're not hiding that. And that's the same thing with private lending, right? Like you should be out there talking about deals you're doing. If you have an investor, what you do is you talk about the returns that investor made on the deal, like showcasing this stuff, because you never know who in your circle has cash. The crazy thing with private lending as we get into this is like, it can be self-directed IRAs. It can be an IRA. It can be a 401k. It can be cash in a checking account, a savings account, or whatever. Like it could be a line of credit. It could be a home equity line of credit. It could be an inheritance. Like you have no idea. It could be an insurance policy. You have no idea where this money could come from. And a lot of times if somebody's sitting on cash or on an IRA that they don't know can be used as cash, like they're not walking around saying, hey, I've got money if anybody wants to borrow it. And so
Dave, who was the first person you borrowed money from? What was the first? Obviously, don't tell us his name, but like, what was that first ask like?
I want to say the very first one was my buddy Dave. And honestly, my first was a very weird situation. I had been trying to wholesale for a while, and I'd done a couple deals. And it was the week before Christmas, 2021, I think. Probably 2021, yeah, because that's right when I got out of the Marine Corps. The week before Christmas, in a 48-hour period, we locked 7 contracts off market. And I was like, oh shit, I can take one of these down myself. And then I was looking at it and I was like, man, 3 or 4 of these are really, really, really good. I want to either flip them, burn them, or just hold them as is. And I was like, okay, so here's what we're going to do. I was like, I'm going to just send an email out to my, at the time, completely there was no, like I had never raised money for anything, just an email list that I kind of had. It was like, I've got these 4 deals. Is anybody interested? I'll pay you, I think I said 1 point and 10% interest. And I actually had all 4 of them spoken for within 24 hours. And 2 of them were one guy and then 2 other people for the other 2. So it was one guy lent on 2 and then another guy lent on the 3rd and another guy lent on the 4th, and I wholesaled the other 3. And I was like, oh shit, all 4 of those people who lent on that were people who had just followed me on Instagram for a few years. One of them I'd never even talked to before. He was just like, yeah, dude, I've got, these are Missouri properties. So it was like 85,000 all in, 110 all in, 72 all in, 140, I think was the big one. But they were all 4 of them were cool, and all 4 of them were cool with it being, I'll pay you the point and the interest on the back end when I sell the deal. But they all trusted me just because of Instagram, because they've been following and they'd seen what I've been doing, which kind of talks to that. But I mean, it's all just networking. So going to local, to this slide, right? Posting about what you're doing, going to local investor meetups, getting known in your Facebook groups, just talking to people back and forth. You can do the crazy like list source prop stream thing. I have a video on that. If you go to my YouTube and you just type in list source, you should be able to find it. But basically what you can do is you can go into those 2 programs and you can select an area and you can search by cash buyers, and you can look for, basically what I did was I looked for people who've bought a property cash in the last 3 years. I looked for somebody who'd bought a property, at least 2 separate transactions, cash purchases in the last 5 years that didn't occupy the house. And then I just pulled, it was like 1,200 people. And then I would say you want to reach out to those people before you add them to an email list, because they might mess up your deliverability if they all unsubscribe or report you as spam or whatever. But I basically separately emailed all 1,200 people. It was like, hey, I saw that you do XYZ. I'm a real estate investor. I do this. Like, if you're interested in being on my list, let me know. And I probably got like 200 or 300 of those people onto my list. Now, I can't tell you certainty if any of those have ever bought the property, because at the time I wasn't tagging my audience in my emails correctly. And I have had so many people come through social media that they all got lost in that translation. But I mean, at the end of the day, like most of the money I've raised has been from people who know me from Facebook or Instagram or met me at an event. And one of the most valuable things I've done is making posts where I'm like, hey, my buddy Mike lent me the money on this deal and he made $16,000 on it in the last 12 months.
This might sound intimidating to people because I'll be honest, social media is intimidating for me. But a really easy post to start building street cred is on your Bigger Pockets account if you have one. Just talk about the deals that you're doing.
That's true.
Yeah.
I guess we can kick the next slide. I probably already hit on some of the stuff on the next slide while we're just kind of talking through this.
Yeah. Well, what I heard while you were talking, you're like, I had about 5 years of investing success. I told people about it. And then basically I went to the contacts list in my Gmail and I said, I got these 4 deals. I'll give you this much money. Who wants to be a part of this? And within 24 hours, people were like, yeah, I'll lend you that money.
Yeah, that's exactly right. And I want to say one of them was from a self-directed IRA and the other 3 were cash. The guy, Dave, he's a friend. I've known him for a while, and he had just happened to have sold a house. And he netted, he netted enough that he maxed out the capital gains exemption for a married person. So I think he was like 517 was his walk away from the sale of that property. And so when I'm like, hey, I need like 200 grand for these, he's like, oh, cool, here you go. But to your point, that private lender presentation, right? If you have like just a decent, it can be a presentation, but it can also just be like walking through the deals you've done and just say, hey, this is what it looks like to work with me. Everybody has their own. For me, I generally like to pay my points and my interest on the back end because I've always thought it was the most ridiculous thing in the world that I would borrow $100,000 from somebody and then pay them $1,000 on day one. So now I really only borrow 99 and then pay them interest on the 100 for that 12 months. I'm like, if it's a private loan, like, especially that's why I like self-directed IRA borrowers. They don't need the money right away. They're not doing anything with it. And so you can pitch them on like, hey, I'll pay you, even if it's an extra percentage point, but I pay you at the end. So instead of, because otherwise what happens is if you need 100 grand for the budget, you'll actually have to borrow like 104 to cover the cost of your interest and points throughout the process of that loan. So it just becomes more expensive.
Oh my God. It's so my first deal, Dave, I borrowed $25,000 from USAA. It was right before I joined the Marine Corps. And then I borrowed $25,000 from this guy that I met that became like a hard money lender, and I didn't understand what I was doing. I actually only borrowed $18,000, but like the note I looked back at a couple years ago said 25,000, and I paid this guy like 60% in interest. It was such a bad deal for me from a financial, but it's my first deal and I still own it, so it worked out. But yeah, paying for your interest up front or paying those points up front, that makes a lot of sense why that is a bad idea.
It absolutely does. So yeah, I would just create some kind of a presentation about what your investors can expect and your experience level as an operator. And then I would bring it to your friends, bring it to your family members, right? Nobody likes to pitch friends and family members, and they've always heard that doing a deal with a family member is a terrible idea, but I would disagree. My parents have now lent on 2 different transactions with me, and it's been totally fine. They've gotten their money back. And say it only becomes a really bad experience if you don't give them their money back. And if you wouldn't borrow from your parents because you're worried you wouldn't be able to repay, then you shouldn't borrow from anybody. So maybe find a better deal or get more comfortable. I have no problem borrowing from my parents because at the end of the day, well, for one, they just got a pretty large inheritance, so they can deal with it. And for 2, I'm very confident that I can repay them, especially because I think the most recent loan was like 60 grand. I'm like, I could pay that out to them in a year if I had to, whether there was a property tied to it or not, but that thing has a ton of equity, so they'll be fine. But yeah, ping them, ask about their 401ks, their IRAs, they can roll it into a self-directed and then they can invest with you.
Or equity in their home now. If they've owned their house for 10 years, you guys have more money available to you than you realize if you find deals right now.
Yeah, my parents have it's probably worth $250 to $325, and it's free and clear. So if they really wanted to, they could tap that too. The email list, you mentioned Gmail, that's a great start, but then you can even go to MailChimp is free at first, but it's a trash software. So, if you're okay with spending a little bit of money, you should go to something like Go High Level or Constant Contact, or I can't think of the name of the one that starts with an A, but like an actual email provider where you can bring people's email addresses into a system and send a bulk email rather than having to like individually Gmail off of an Excel doc, which is not fun. Or worse, you make the mistake of not blind copying and you copy all of your investors to a list. Because I will tell you right now, I have had an investor email me and CC me and every person on their investor list. And I copied every single email from that and then was like, hey, would you guys like to invest with me? I won't share your information publicly, and this is the kind of returns I'll give. And I would say 30 or 40 people from that email list joined my list. So if you accidentally CC a whole bunch of people, I am going to poach your private lenders, and I hope anybody else will, because I'm like, oh, wow, like you're an idiot, and this is free names. So, make sure you at least blind CC everybody, or get an actual thing like MailChimp. So it just sends an email, an individual email, and then you can actually, within Go High Level or any of these like real providers, you can tag them as an accredited investor or sophisticated investor. So depending on what kind of deal you're doing, you can avoid SEC deals or issues. But private lender side, that doesn't matter. And then social media. I'll say that deal where Mike made 16 grand was one of my absolute worst flips. I mean, it was the sexiest before and after, because it was the first house fire flip I ever took down. And I didn't realize how involved the city was going to be in pushing my crap in. And so I went $74,000 over budget on that flip, and I ultimately lost 14 grand. But he still got paid. And so I've even made that post before where I'm like, hey, you guys, if you ever want to talk to one of my lenders, like this guy, he didn't realize I lost money on the deal that he lent on until a year later when I was joking about it with him over a beer. I'm like, but at the end of the day, he still got paid, even though had I not paid him, I would have actually profited 2 grand on that deal. And so for me, that was a huge credibility play. And that one deal and talking about that has probably raised more money than any of my others, just because people are like, oh man, Dave lost money on this deal and still paid his guy. All right, that's the kind of person I would want to invest with. Because at the end of the day, like for me, my reputation matters more than the deal itself. And I tell people, I'm like, look, the biggest thing I can tell you is this, like, sure, you can take the property back, you can foreclose, you've got a lien, like you've got all those safeguards. But at the end of the day, if I screw you, just post it online and tag me. That's worse for me than anything else, is if that gets out that I'm, screwing my investors. Now my entire business model falls apart. So, and they usually like that. I'm like, yeah, I'll put that in there. I won't sue you for defamation if you post about this. Well, as long as it's true. But it's never happened, and I'm not worried about it happening. I think we could go slide.
Yeah. How do you do this?
Yeah, I mean, look. Okay, so really, what you need to know here is just if there is no lien on the property, meaning you buy it cash with a lender, then they would be a first position lien, meaning they're the only debt on the property, the only one with a claim. And the only real difference between first and second position lien is, if you're not familiar, let's say you have a 70% bank note on a property and you borrow the extra 30%. And then let's say the market dips and you bought this house for 100 grand and you sold it for 80. The bank would get their total $70,000, investment back before the private lender gets anything, because they're in second position, meaning they don't get paid back until that first position is paid out. And so in that scenario, that second position would get their 10 of their 30 grand back, and then they'd be left trying to get the last 20,000 from you, which is not ideal. Now, I will say it is, quote, more risky, but generally in a second position, you also can charge, because of that risk. I've paid as much as 15% interest and 2 or 3 points for a second position loan, because it's, quote, more risky. As long as you have equity in it and you know that you're going to be okay on it, that's fine. So, but a lot of investors won't touch anything that's second position lien unless there's like some crazy equity built in. So like they might do second position if your total debt on the deal is 60%, but they wouldn't do it if they're going to be closer to 100%. So just understanding that you're going to have to pay more if you're trying to get a second position lien, which is why I generally try to do the full purchase price and renovation budget as one loan from a private lender and just cash everything else out, so that one person is my only partner on the deal. They get paid more in interest, and it's just a lot simpler than putting people together. And then you can also structure either a debt partnership Would you just be like, if I called Skylar and I was like, hey, I got this great deal. This would never happen, by the way, because I am not the operator of my deals. But if I called and I was like, I got this great deal. If you give me $100,000, I'll do all the work and I will split the profits with you 50-50 just for like signing on the debt and investing. I do the opposite. I'm the guy who gives money for the return and don't do any work. I don't go and ask people for it because I'm like, I don't want to flip the house and I don't want to manage the property. So I have a partner who does all of that. And I've got a couple different deals with him where I'm a 35% or 50% owner, depending on what legwork was required. And I do nothing. Like I signed on the debt, I gave him some money, and then I sit back and enjoy myself. That's a good way to do it too. And the equity partnership is really, honestly, it as the slide says, that's more of like an actual true partnership. That's not really the private lender stuff. So we can probably skip through that. But
Yeah, could I maybe extrapolate or just ask a question about debt partnerships? That I think your buddy, the other side of you, is doing. If you guys find good deals that you don't have the money for, you can go. But let's say you have a stable job, you have a good solid W-2, and you can get debt. You could secure the debt, and they could bring the down payment, and you could partner too. That's another way to put a deal together.
Yeah, I've done that. The one that I'm doing with this guy, the most recent one, he found it. It's 13 single family houses as a portfolio. He found it. He's doing all the flips and all the property management. And then I just signed on the loan and put the down payment. So
Sweet.
People really overcomplicate the private lending stuff. It really is as simple as just making sure that your lender is on the deed of trust, meaning that they actually have their lien backed by the county, and that there's a promissory note attached to that deed of trust that explains the terms of their lending. In my case, it's usually 1.10% interest. And then if we go past like 6 months, maybe it goes to 1 point. Actually, usually I think I go to 2 points and 12% interest just to make it, lucrative for them. But essentially like, hey, if we go past this 6 month or this 1 year mark, I want you to get paid a little extra. And really any good title company, or if you're at an attorney state, they can do all of this for you. And they can notarize it and document it and everything. And it's really as simple as just being like, hey, title company, like these are the terms we're looking at. Can you draft all this for us?
Yeah. So in North Carolina, your attorney can put together the promissory notes and do all this. I'm working an off-market deal that I got seller financed right now, and my attorney is going to be putting together the promissory note.
So glad that I'm a title state and not an attorney state. I can't. I don't know. I just in my head I imagine the attorney state close is probably more expensive.
Yeah, I wouldn't know.
Yeah, I mean I'm at $300 to $500 closing costs and fees, so not too bad. But.
Yeah. So the form part is easy, right? You just gotta let's say the predicators. You just have a good deal, and you can get money for it. I think something that has stopped me a lot is feeling like I don't have the money, so I don't look. When you just flip it around and you look for deals, even if you don't have the money, and then you can get the money. Or if you're underwriting properly, that's how you can wholesale. And don't build a wholesale business per se, but don't let not having money stop you from looking.
Yeah, I agree. Slide, I guess.
Yeah.
Really, this is more of just an open air for conversations. Always curious about questions and how we can help. But the private lending stuff is not. I feel like people think it is more complex than it really is, and it's similar to seller financing, where I can go to Skylar or Skylar can go to me and say, I have this deal. What terms make it to where you're willing to lend on it so that I can do it? And to be fair, your terms will most likely be worse than anything you get with a bank. But the headache is not. There's no rules. Like if you've done there's no need for your birth cert and your social security card and your last 3 years tax returns and your P&L and your income statement and your bank statements and your it's as simple as, hey, title company, this is the guy. Please fill out this document. These are the terms we agreed to. It's also faster, most likely, because they can get you as soon as they get that money, it's closed. It's not on your credit, which is a win for a lot of people, especially if you have dog shit credit. And so there are perks like that. But I think the real perk here, where this really becomes way easier to work with than a bank, is that if you're doing this on like a flip. If you're doing it on a longer term deal or whatever, you can argue both are great. And honestly, you'd want the lower interest rate. You'd want to go through the bank if it's a long hold. Like there's a lot of reasons that the bank is often the better answer. But if you're doing like a BRRRR or a flip where you're going to buy the house and renovate it and you don't have the money to do all of that yourself, the private lender wins, in my opinion, because you don't have to go to the bank and do draws. So you don't have to deal with the process, the headache with some construction loans where you buy the house and then you still need a down payment and then they put part of the money into construction. But every time there's like wickets. Hey, you've got this part done. We need the city inspection and we need to go ahead and look at it ourselves before we release the next part of your payment. And so often when you deal with construction loans, you're going to end up with, over what's a normal 6-month period, you might end up with a full extra month of time where you're waiting on them to inspect it, waiting on the draw to get approved, whereas when you're running the project yourself and you don't have all those rules, you can, as long as you know what you're doing, right, you can keep rolling even through the inspections from the city. And so you can shave potentially a month or two, and velocity of money when you're flipping a house is powerful, right? So it's less the savings on the interest rate and more the savings on like just simplifying the loan and the time that you can close and the rules, because you're playing, you and a friend or you and a family member are running a deal together rather than FDIC and Fannie Freddie and all these other, depending on how you do the loan product, all these other rules that have to be dealt with.
Yeah. So Dave, let me ask you a question.
Yeah.
What advice would you have for me? I own 5 rental properties. I've been investing since 2020. I'd like to buy another property, but I don't have enough money for the down payment. What would you say like my next move is?
Are you looking for just a rental?
Yeah, just
like a long term, like it wouldn't be something you pull equity out of?
Yeah, I'm looking for a long-term rental. I probably have equity in my portfolio.
Yeah, I mean, I would, if you have equity, you could pull a line of credit potentially for some of that. But my first 2 things would be, honestly, I probably wouldn't start with private lending, because a lot of private lenders want shorter term. So I would either look for like the debt partnership, longer term play with somebody But what I would probably look for first is every single deal that I offer on, I would just ask the seller to carry back a second. Meaning, hey, if I'm buying this house for $100,000 and the bank is willing to lend me 80, can I make monthly payments to you for the last 20? The seller would be in second position, but the benefits to them there are a few, right? They get a little bit of cash flow for a little bit. Depending on the interest rate you negotiate with them, they make a little bit of extra money on that 20 grand. It's probably not a ton, but it's something. Again, no credit, no whatever. It's very simple. It's very seamless. And if they own the place free and clear, or they have for a long time, they're still getting 80 grand. The last 20, they just get trickled out over, call it a few months or a few years, whatever. But they also, that kind of, depending on, one of the things I like with seller financing is just that it helps with taxes. If you're like, hey, you got 100K, you're paying 100K in capital gains tax or whatever that math is. But if you take that 20,000 off, and then those next few years, like you'll end up saving a decent chunk on the taxes on that 20K just by breaking it out over a few years and keeping into a smaller bracket. I am not a CPA. This is not tax advice, blah, blah, blah. But also that's where I usually start. I almost every single deal I do, I ask if somebody will carry a second, and I explain why and how, because I'd rather keep the money in my bank. I would rather, if I have 20,000 to put into a property, I'd rather keep that 20,000 in reserve in case an HVAC or a whatever blows up the month after I buy the house, and have the seller financed for at least a portion of it, then put the 20,000 down. Now, if I had 40,000, I'd put 20,000 down and keep the 20 grand in my bank. But I like having a reserve. And so if I was kind of limited to either or, I would definitely go with the creative option.
Yeah. That's good, seller carry. I have not thought of that. So thank you.
Yeah.
And I know people on this call are in in a similar spot, which is why I asked the question.
I've done that several times. My second, well, I guess technically it was the third piece of real estate I ever bought, but my second piece, the second thing I ever bought that had a property on it was a 10 unit, and I put 5% down and got the lender to do 85 and got 10% from the seller as a carryback. And that was a 10 unit that I sold 4 years later for, $140,000 more than I paid, and I only put $10,990 down.
Yeah, it's a nice return.
Yeah, it's pretty sick.
No matter how you do your math.
Yeah. Even with Marine Corps math, it worked out.
Yeah. What motivation or words of wisdom? I think a lot of people think real estate investing is going to be one way, right? And they dream about cash flow and retiring really, really soon as they start. And then an HVAC goes out or something happens. Like what advice would you have for somebody that maybe has 2 or 3 rental properties, and just experienced some CapEx thing that burned through their reserves or killed their returns, and they want to keep the motivation to move on? Because in theory they believe in the dream, but the cash flow to get their path is different.
Yeah, well, for one, I could go on and on about random stories that meet your criteria for that. I've had my share of whoopsie doopsies. And I think that's probably the advice is I've had some pretty gnarly things go wrong in real estate, and I'm still way up on all of it. There are times where things go wrong. Usually it's not something that'll break you. If it is, you've got insurance. So it's really, you're all right. I think, the two things, right? Real estate, it's a long game. If you're thinking it's a short game, you just manage your expectations. It is a long game. In the long run, you will absolutely win in real estate. And as much as there's all these get rich quick guys out there, I don't think real estate is a get rich quick scheme. I think it is a get rich for sure game. And as long as you play your cards right, and you can really, the only thing with real estate, as far as I'm concerned, is as long as you can afford to make your payment and hold on to the damn house, in the long run, you're going to win. And so there are a lot of mistakes that can be forgiven over time with real estate, unlike most other assets. So as long as you can afford the payment, which is why cash flow as a portfolio is so valuable, because even when things go wrong, as long as you're not coming out of pocket, you're fine.
Yeah, I'm writing down your quote. It's not a get rich quick scheme. It's a get rich for sure scheme. Yeah, and time, right? That's what Warren Buffett says in the beginning, his favorite holding period is forever, because that forgives things. And as there's so many things in our economic machine in America that are the reason holding it forever is such a good thing, right? You get fixed debt, and the government keeps printing money. Well, the government is helping you pay off your loan. It's not a direct connection by looking at it, but by them devaluing the dollar and appreciating your asset, they're helping you pay off that loan. It's the same way they are able to operate on a deficit, right? Because they just print money. And if you buy it and hold it and you get good long-term debt, you're just going to win. And I love that. The time is mitigating replacing the HVAC or the roof or whatever, and just changing your expectation to, I'm retiring tomorrow or next year, to I'm going to do this and pick a strategy and then strategically exit when I want to.
Agreed. Absolutely.
Yeah, does anybody have any questions? Sorry, I've been kind of asking questions selfishly. But I know we got some military guys on here. If you don't have a question, that's fine. If I asked your question for you, you're welcome. Yeah. How can people get in touch with you? I know you have text FTM to you, but
I don't actually know if that still works. Honestly, it should, but I would just say the easiest answer is just to go to really any of your favorite social platforms and find me at From Military to Millionaire.
Okay. Tell me about the war room. How can the war room help me out?
Honestly, the war. Oh, you're gonna get me all fired up. The most common thing we hear when we do live events is I get veterans because for anyone who doesn't know, the war room is my mastermind group. It's only open to service members and vets. We don't let anyone in who didn't personally serve or has a honorable DD 214. And so the most common and most like fulfilling thing I hear when we do live events is people coming up to me and saying, this was the first time I could be myself since I left the military. Like I actually fit in. I feel like I have a home again. So like that intangible benefit is huge. It's 600 now, service members and vets. We got a guy who just got a plaque at ClickFunnels for 200 million through one of his funnels. So we've got like 7, 8, 9-figure guys in there. I'm not the big fish. But what's cool is it's like, a lot of these kind of gurus have like an educational course and then they're like, oh yeah, I also have a Facebook group. We started as just a community. I wanted a space for service members and vets to hang out. And it blew up into this thing where now, sure, we've got master classes and courses in education and my full creative financing course and my full VA loan house hacking course and my full off-market deals course and buy your first rental and personal finance and wholesaling. And other guys have added courses. And now we're about to build an underwriting course for syndications of multifamily with a girl who's a VC underwriter. And all these crazy things, but the coolest thing is just the community. It is a place for service members and vets to, go to feel like they're at home and be able to ask vulnerable questions and get valid feedback. There's no upsells. There's no, bullshit. It's just pure calls and accountability calls and groups and networking and hangout. And it was never intended for people to do deals together, but it happens all the time. Like it's just a really, really, really cool community. So really all it is a space for, it's a mastermind group for you to go if you want to take things to the next level and be surrounded with people who you can bounce ideas off and network with and do deals with.
Sweet. And get motivated by their courage to continue jumping off the cliff to figure it out.
Yeah, there's some just absolute killers in that group. It's wild who we've got in there now. Like we just the current sitting judge advocate for Camp Pendleton just joined. Was like, he posted a picture. He's like new to the group, and it's like him in the judge's outfit with a guide on behind him, just like 1,000-yard stare at the camera. And I was like, I feel like I'm about to get court-martialed, but also cool. Welcome to have you. So we've got like some really cool everything from E2 to I think we have I don't know if he's pinned yet. We have a general's. No, I think we just had a general sign, and I think we have 2 1-stars in the group. But we don't talk ranks. So it's like I kind of know, but not really. I know we've got probably 15 active duty special forces guys in there. There was one like probably 4 or 5 months ago. There was like a Navy SEAL incident, and I had to text one of the guys because I knew where he was, and I was like, "Please tell me you're alive and you get this text. Like this wasn't you." So we've got some pretty cool dudes in the group. A lot of girls too. Obviously, it's a military group, so it's kind of weighted, but
yeah,
good group.
Cool. Well, thanks so much for your time. I know you got a big call webinar you're hosting today. So if you're in the military and you want to join, go to can people still join that?
Oh, the webinar?
Yeah.
If you give me 1 second, I can get the link. Here you go. I think I've got, well, it would take me a minute to find the actual number, but when I checked this morning, we were on track to be the biggest webinar we've ever had, which should be close to 3,000 registrants. I might be close to 1,000 people on it live tonight, which is wild.
Sweet. So if you guys are on a call and you click on that link in the in-call message, you can sign up for it. And Dave's going to be talking about how to use the VA loan to buy 3 rental properties in 2025.
And for the loan officer on the call, don't worry. I definitely do not try to void occupancy. I have my NMLS as well. And I'm not going to jail over some dum-dum.
Appreciate you.
Yeah. No, I do it the right way. How to rinse your entitlement and house hack and all that good stuff. Yeah.
Sweet. Well, yeah, Dave, thanks so much. I know you got to prep for that.
Yep.
Everybody that was on the call, thank you very much. I'll be using Gemini to roll out a summary to send out. I'll be pushing the video out tomorrow, and I look forward to building wealth with you guys. Let's buy some more properties.
Oh yeah, I appreciate you guys.
Yep. Thanks, Dave. Take care.
Right.